Hello, trading is closed on June 30th, 2021. We always begin with our disclaimer. It's my trading plan for tomorrow, July the 1st. Trade at your own risk because I can be completely wrong. Had a few calls. Look for the pattern with the early low. This is it. Tomorrow has the early high. We said that unless we gapped and overtook this high promptly, we should see lower prices. Even if we don't close lower, we actually got lower prices immediately. You don't have to get more than that, but normally you do. Not always. And the way I do things, the day closes is essentially unchanged, which I'm defining as a move of under 0.25%. It doesn't really change much. It still is a negative pattern, which although it paid off, didn't pay off as much as it normally does. So most of the time, not all of the time, you either gap up over this high or at least take it out fast, or else you see lower prices, even if you don't close lower. During the day, MEJT identified this move as false. We retraced. Identifies the retracement as false. We recovered. Once again, our signals are mixed. It's positive. We started off with a low bar, finished up with a high bar, but it's not so positive that after breaking out to all-time highs, we closed under all these prior highs. Even though futures are up to a new high as I'm recording this, even though this all could be invalidated by gapping up tomorrow. I don't know how I'll open tomorrow. If we open around here, it's a rejection of the new high, even though it doesn't have to mean that we'll never see it. As far as tomorrow is concerned, you really want to get follow through when you break to a new high and not just retrace all these highs as soon as you hit them. Tomorrow's pattern has the early high. Doesn't mean you won't get down. Typically, it's a rally day with a fine lower high. Failure is a straight line drop. Signals are mixed. Now it's bullish. The low of the day was the first bar, high of the day on the last. Bearish. We couldn't close over the intraday highs. Now, tomorrow should be a big move, but if it close little change, it just delays things. And with the holiday coming up, if we did just close unchanged till it was over and then had a big move, it wouldn't be a violation of anything I do. That's one of the options. Now, the end of June is historically one of the weakest market periods, and instead, counter to the norm, we rallied to new highs. The week in which the Independence Day holiday falls historically is almost always a bullish week. In fact, it's historically one of the most bullish weeks of the year. So you would anticipate we'd be going up. But because we had a reversal of the normal trend, I'm less confident that we'll go up because normally you're recovering from a decline the Independence Day week, and here there's no decline. I don't think it's a reliable enough indicator for a person to risk money on. As far as tomorrow is concerned, certainly the signals are mixed. Normally it's a bullish day, and we're already over this in futures to a new high. So if we keep it and gap up over this high, there's no reason we can't go higher that I see. But just remember, if you ignore futures, we've rejected these highs, and if the normal pattern fails, it's a straight line drop. Very often, not always, you're going to be gapping outside the range one day, one way or the other. We're up here now in futures. I'm not predicting a gap under this low, but if it happens, it's very negative. And the fact that we didn't get the normal follow through to this drop makes me suspicious and on the alert. But the only thing I'm going to say is a pattern with the early high. Normally bullish, failure is a straight line drop. Signals are mixed. And we'll have to see how the open plays out. And that's today's call.